Hi, today we are going to discuss about Akums Pharmaceuticals Ltd IPO. The data I'm going to show is extracted majorly from the ride-hailing prospectus of the Akums. First, we are going to discuss about Akums business. The company is majorly incorporated in the year 2004 and the company's core business is CDMO. CDMO is nothing but contractual development and manufacturing organization. Company is majorly doing this type of services. Let's say I will explain you through an example. Suppose we want to develop drug or medicine for the cancer patients, you have to do some extensive research. Once your research is successful, you have to meet some quality parameter or testing, then you will get some regulatory approvals. Then if everything is goes fine, you have to do that manufacturing and sell those products after getting proper packaging, labeling and marketing. So it involves like complex process. Sometimes even large companies they may not focus. They large companies they will outsource some of these activities to the outsiders. Let's say like research and development they will outsource. Let's say they will outsource manufacturing because sometimes it involves heavy expenditure for purchasing plant and machinery. Maybe it is like seasonal products, they don't want to put that heavy investment. Sometimes it requires some efficiency also. So because n number of reasons they will outsource these services to the CDMOs who are specialized in these activities. Here we can see manufacturing and solution to clients and services and research and development and preparing and filing regulatory dossiers in which country you want to do that marketing or selling those products. Next thing is not only Akums is doing CDMO services to the customers, they are like manufacturing and selling this formulation and APS business for themselves also and selling in the market. Coming to the CDMO business in terms of revenue, production capacity and clients in Indian domestic market, Akums is the largest business CDMO business by market value, which is nearly having market share of 29.4% in the Indian domestic market in the year 2023. In comparing to the year-on-year growth rate, it is having nearly 14% growth, forecasting to have growth rate of 14% from 23 to 28. Coming to the manufacturing facilities, it is having nearly 10 manufacturing units across India, having production capacity of 49.21 billion units annually. And that too, company is not utilizing its 100% production capacity. It is using only 40 to 50% of capacity. And in future, they want to increase this utilization capacity to 60 to 70%. And Akums, we have already discussed, it is one of the largest CDMO business in Indian domestic market. If we see out of 30 leading pharmaceutical companies, for 26, Akums is manufacturing these formulations in terms of sales value. In compared to the segment-wise result, we have already discussed companies like majorly involved in CDMO formulation and APS manufacturing. CDMO business, which is accounts nearly 75% of revenue. Formulation, it is approx 21%. API, it is 5%. Correspondingly, the profit from these segments is from CDMO 14%, formulation approx 6%, API we have like negative profit 58.36%. If we compare the financials of selected Indian CMOs in previous year 23 with its competitors, example Tirupati Medicare, Innova, Capta, Snowchem Pharma and Akums. If you see total revenue, it is 3,700 crores. It is like compared to the peers, it is high total revenue. In compared to the compound annual growth rate of revenue, it is 16.28%. Compared to the peers, it is bit low. Compared to Tirupati Medicare, it is bit high. If you go to the EBITDA, it is 384 crores. If you come to the PAT, it is 97 crores. Compared to the peers, it is high. if you see, but PAT year-on-year growth rate CGR, it is 9.5%. In terms of value, it is 97 crores high, but in terms of year-on-year growth rate, it is 9.5%. Because every year they are getting almost the growth rate is very less compared to the peers. ROCA and return on equity also we can see, even though PAT in terms of value it is high, but return on equity and net worth is low compared to the Innova and Smoke and Pharma, because we have already seen earlier slides, the production capacity is less because they have invested heavy on the plant and machinery, but they are not using that 100% capacity. So if you consider their profit versus their equity or capital employed, it is less. In the competitors like Innova, Captop or Snowchem, it is like high. In future, if they are going to increase their production capacity 60 to 70%, these percentages are going to improve. And coming to the EBITDA or PAT margins, here also it is less. Whatever reason I have explained earlier, this PAT margin is also going to improve after increasing this production capacity, as well as once they will get this IPO proceeds, they are going to repay their debt. So the interest also will come down. So PAT also will get improved. Interest coverage ratio, we can see it is not good compared to the peers. After this IPO, this interest coverage ratio is going to improve because there won't be any interest further after repaying this debt. And R&D expenses. In the pharmaceutical industry, the R&D expense is like very important, because how much R&D they are like expense they are getting putting their expenses, they are getting so many products in the pipeline and they are going to get those returns in the future. Compared to the peers, it is a good 2.68%, but industry it is approx 8%, 8 to 9%. Fixed turnover ratio also we have earlier discussed, it is not using their 100% production capacity, so fixed asset turnover ratio is also less. It is also going to improve. Debt equity ratio, it is 0.75%. It is also going to decrease further after repaying the debt. EPS, we can see the EPS is 6.63, which is low compared to the others. Like major reasons all these factors are low is, one is not using their 100% capacity, other is they have put heavier investment on the capex. Because of these factors, even though their PAT is good compared to the peers and revenue is good, these ratios are somewhat getting diluted because of these reasons. Shareholding, also coming to the shareholding pattern and how they are going to use these IPO proceeds. Currently, Sanjeev Jain and Sandeep Jain, they both are having 42.45 and 42.46% of shareholding before the pre-offer, and Rubek UC investment is having 15%. All put together, it's like 100%. Coming to the IPO book building process is involving 856 crores, 0.74. In which two is involved, one is fresh issue, the second is offer for sale. Fresh issue is nothing but 680 crores involving 1 crore equity shares they are going to issue in the market. The offer for sale is currently the shareholders who are having 1.76 crore shares they are going to sell in the market, and they are going to get this proceeds 1117 crores. These shareholders are going to these proceeds. Their company is not going to get any of these proceeds. Their company is getting only fresh issue proceeds, which are company going to use for these purposes. One is repaying company debt, which is about nearly 387 crores, and incremental working capital requirements. Company is going to increase its production capacity, so there will be incremental working capital requirement in terms of inventory or trade receivables. So it is nearly 55 crores, and company wants to pursue some inorganic growth through acquisitions. There are some acquisitions are in pipeline. The amount is not yet decided, but some of the acquisitions are in pipeline. They are going to utilize those proceeds also for these activities, and some of these activities are used for proceeds are used for general corporate purposes. we are going to discuss about IPO issue details. The IPO price band decided by the company is 646 to 679. Each lot is consist of 22 shares. For one lot, we have to put investment of 1409.38 rupees. And this IPO subscription date is opening on 30th July and closing date is 1st August, nearly like 3 days. And allotment, whether you will get allotment through IPO or not, will be confirmed on 2nd August. Listing will happen on stock exchange on 6th August. And out of the 680, out of these IPO, 75% is net issue is specifically reserved for the QIB, like qualified institutional investors, and 15% non-institutional investors. Retail investor is only 10% of the net issue is reserved. Industry PE ratio. PE ratio is nothing but we have to consider market price of the share which are listed in the stock exchange as well as what is the earning per share. Considering these two factors, we will say whether this company share price is overvalued or undervalued. If it is overvalued, we are not going to get any profit. If it is undervalued, if we invest, then we will get some profit in future if the price going to increase. Considering the pharmaceutical industry PE ratio, the highest is 71.86, the lowest is 31.56, the average is 48.32. Considering these factors, if we analyze the IPO price band of Akums 646 to 679, the price is looking bit higher. It is it is bit higher compared to the highest industry PE ratio. There may be considering some premium amount in the price band. There could be some of the reasons because company is specialized or having some unique in the CDMO business. That is one of the reason, and some macroeconomic factors also favorable for the pharmaceutical industry, and microeconomic factors which are related to the India. Like government is providing some incentives or benefits to the pharmaceutical industry, and GDP and growth of the economy is also good. Considering is all these factors and company future, they want to expand or utilize their capacity, so profits are also going to increase. Considering all these, companies IPO price is fixed. I think, hope this video is helpful and informative. Please subscribe to my channel. Thank you.